called it properly was Credit Access. That stock's down about 14%. Now, with that headline out of the way, let's see what's bruised the Nifty. BEL is down 2%. IndusInd Bank is down 2%. Let's look at the reaction on ICICI Bank. ICICI Bank is actually up 0.5%. Pretty decent performance and good numbers as well. JSW Steel, despite a good show, I mean, there are global headwinds this morning. So stock is lower by about 0.7%. Let's check NTPC as well. NTPC is the other result reaction, 1.5% lower on NTPC. So it's an overall fall. Infosys, Trent, M&M, BPCL, Tata Steel is cutting across sectoral lines. Nothing's holding up, at least for the timing, till some some semblance of stability comes in. There is a little bit of buying in FMCG, Britannia, Lever, Asian Paints, ITC. They are either flat or slightly positive. And then there is Dr. Reddy's. Apart from that, everything is down for the time being, and the markets are still trying to find a base.
Well, should be a couple of stocks are doing well, so let me just highlight them. DCB Bank, we had the NIs that were up close to 15%, and the gross NPAs cooled off as well. So the street has taken note of that. So that stock, in fact, is doing fairly decently this morning. I think it's up close to around 8% actually. So good going on that particular name. On the flip side, a few more stocks that should come up for you on the screen. Pull up JK Cement. Let's see what that stock is doing to kickstart trade. That should come up for you on the screen. The numbers are pretty okay. The mood of the market isn't that great.
0.5%
but I think that one's up. It's up close to around 0.5%. Sierra and Silk Mills, not too high volumes, but that stock is down close to around 8%. Newgen Software is down close to around 8% as we speak. AU Small Finance Bank is taking a knock. And CDSL as well, I think they came out with a set of numbers. That stock as well has now lost close to around 6.5%. Remember, these are some of the stocks that did very, very well, but now they're pulling back a little bit. We'll have the management of Torrent Farmer as well that will join us in just a bit for now. So let's see what the initial take is out there. The way ahead is something that the street would like to know. For the time being, the stock is up close to around 2%. I think they're guiding for better margins in Q4 and from here onwards. And they're also seeing some kind of ramp up in their business. So a start in the red, 22,900 is defended. Can the bulls fight back? We'll have to see who's going to put their hand up and stand up for the bulls. The Nifty Bank as well at a very, very crucial level. 47,800 is from where we bounced last time around. We'll have to see whether or not it can defend that mark.
The interesting thing is that with budget, usually if the market runs up ahead of the budget, after the budget, usually the reaction post-budget is negative. Budgets are rarely positive events. Market ends down, and of course we had that capital gains tax event. It didn't last very long. But this time, the market is already cratered sharply going into the budget. And expectations in any case are running low. So that's a potent recipe. But of course, something has got to come from the budget, right? So it's actually both fronts now. The chorus for the RBI to do something on easing liquidity. And of course, our colleague Latha, for example, wrote a piece over the weekend sort of describing the demands and potentially what can be done, the options, etc. So something on liquidity, and of course something from the government side, right, to arrest this cyclical slowdown. Can anything be done? Some relief be provided to the middle class, etc. So those are bigger questions that I think we'll need to track over the next fortnight or so. I think
before Prashant, you get into the market conversation, just some context. I looked at the numbers. We know this, but when you read the number, it really hits you. It's been a tumultuous start of 2025. The Nifty is already down about 3.5%. The mid-cap index is down 8.5%. The small-cap index is down 12%. So it's been a crunching blow. And I think this is the real question of a lot of the retail money as well. And we'll have those questions and those trends play out, whether now retail money can still keep the faith and keep the buying going, because now is when, you're seeing your profits down 25-30%. So what will people do in the event of such a decline? And it's the one that we're in the midst of even now.
Absolutely. And so far they've kept the faith, and the money's kept sort of rolling into mutual funds, etc.
And history suggests that this is normally the best time to keep your SIPs going, right?
Yes.
Personally, I'm doing that, so I'm backing myself.
Yeah, absolutely. And the SIP book, actually the discretionary book in terms of mutual funds has been up and down, but the SIP book has continued to remain very steady. And that's basically, I think, about 85% of the money which goes into mutual funds is through the SIP route, not the discretionary route, which is essentially lump sum based on what the market is doing, etc. So it's systematic plans which have kept things going. You got some bond market flashes there. 10-year yield has fallen to 6.64 versus Friday's close of 6.72. So that's interesting. and we'll have to sort of look at this a little more closely. 86.36 on the currency. I think though that is, the dollar is a little stronger as compared to the last close. We'll have to just sort of put these into context. But, I think a noticeable fall coming in on the 10-year benchmark as well. Okay, markets recovering a little bit. We're back at about 22,950. Manish Sonthalia is a market master of the day. He's Chief Investment Officer at Emkay Investment Managers. Manish, good to have you with us here. Good morning. Thanks very much for your time. So how are we set up with the fall that we've had and all the events in front of us? Would you say a bulk of the fall, at least at an index level, is done?
I think another 5% on the downside and we'll be probably done. I think markets won't sustainably be there below 22,000 for a very long time. All the negatives are largely known and is being priced in the market slowly and gradually. But below 22,000, I think there could be earnings comfort, whatever 10-12% earnings comfort on the Nifty 50 for 26. That's par the course, and valuation of 17-18 times is doable. Last 10 years average valuation has been 17-18 times. So I would think at the index level, Nifty 50 level, you could see some buying support coming below 20,000.
That's good to hear. That's good to hear, Manish. That maybe we're probably at the bottom of the pit now, and it gets better from here. So you're saying that at around 22,000, given the earnings projections right now, we'll be at 17 to 18 times. So let's take that earnings piece as, up as well. FY26, I'm not talking about FY25. This has been a write-off year anyway. FY26, what are the kind of numbers that you're working with at this point? Give us some sense on the recovery and what makes you hopeful that eventually this trough will move higher.
So FY25 probably will end Nifty 50 EPS levels of 1075. And you add another 10% to that, that's 107. And you add another 10% to FY26 numbers, and you get to a level of 1315. So on the average of FY26 and FY27, you broadly be at 1250 on the Nifty 50 EPS. And you give it a valuation of 17 to 18 times, you're broadly there at 22,000, 22,000. Last 10 years, median valuation has held at around those levels. I think we'll fall to those levels, given the spate of negativities that are surrounding in the market. And from there, it is going to be pick and choose on the Nifty 50 numbers. Companies that will deliver good numbers are likely to find support. Companies likely to report better than EPS growth estimates of 10% will likely outperform, is what my understanding.
Hi, Manish. Good morning. Good to see you in. So, 5% from here will take us down to the 22,000 mark that you're talking about. My worry is with regard to the broader markets. Now, that's seen a crunching blow. We're not talking about 8-10%. That could be only the headline index. Stocks have fallen 25, 30, 35, 40% as well. Maybe some of them ran up ahead of themselves. What's your view on the broader market? Still more pain to go? Or do you think bulk of it is now getting factored into the price?
So, Nigel, at the index level, it should not be coming as a surprise to anybody that valuations were deviating 1.5 times standard deviation away from the mean. And in extreme euphoric times, even in the past, such sort of valuations for the mid-cap index and the small-cap index were never seen. Of course, we can discuss that, individual names would have merited elevated valuations and so on and so forth. But for the index as a whole, that is what is giving me, right? And even now, the valuations really have not come down to historical averages as far as the mid-cap and the small-cap numbers are concerned, the index level. So that is what is correcting, and obviously there will be individual picks which will be outperforming the index and some will be laggards. But I think broadly that is what is playing out. It was elevated, valuations didn't match up to historical averages, and it's just meandering and reverting back to the mean.
Manish, what will you buy? But people are saying this dip is a great buying opportunity for a longer-term investor. What do you think has come to those levels that you like?
Yeah, so medium-term and long-term story of India still hold good. Short-term is a bit of a pain. And I think I have reiterated in the past as well, currency depreciation is the theme for calendar year 25. Buy export, buy banks because they're extremely cheap, buy health insurance and all those plays, and buy capital market-related entities. They would relatively outperform given, the growth outlook that you have for the medium term and certainty about it. And the rest of the spaces is a lot dependent on policies, currencies, when you come to import related stuff and elevated valuation. So I think these are the areas where you can hide on a relative basis, which will likely do better than the rest of them.
Yeah, no, you can hide, but you can't. But anything where you make money, hiding is one thing. Manish, talk to us about a couple of ideas. You're a bottom-up guy. I mean, with full disclosure, something which has fallen enough and where there is value. One or two names, which gives us a sense of how you're thinking about things. Yeah.
Yeah, so Prashant, I think there's a lot of value in health insurance companies, and you know the names broadly. You know, they are at very beaten down valuations. You were discussing one of the names earlier during your conversation before I joined in. You know, these are some of very exciting plays and available at very reasonable valuation. You will have a case of, you know, commissions across the health insurance companies coming at par. Today, you know, Care Health is paying high insurance commissions, then maybe a Star Health. 1 year down the line, they'll be at broadly the same levels. You are looking at 20 to 30% sort of a growth out here. You are looking at prices which are at 2-year lows. There's adequate margin of safety. When it comes to large cap banks, of course, you know, you have pain in the retail NPA credit cycle. Tier 2 banks won't be able to handle it that well as the large caps. And today we are talking about large cap banks, both in the public and the private sector, trading at less than 15 PE multiple. There's ample comfort out there. Pharma, in any case, both on the generic export side, domestic CDMO side, export CDMO side, the runaway is big. And depending on how each individual company reports numbers, there's a lot of play and value out here. And of course, your platform companies, you have the Zomatos of the year. You know, the numbers were not good. Profitability was an issue. But I would still believe that, you know, on a medium term basis,
Got it.
should be good.
Okay, all right, Manish, always good speaking to you. Thanks a lot for joining in. As you said, 5%, maybe at the maximum on the downside on the headline index, but individual stocks and themes is what you like. Let's move on to our next management, Torrent Pharma. That's a stock in focus to discuss the past quarter's numbers as well as the way ahead. We're joined by Mr. Sudhir Menon, the Executive Director and CFO at the company. Hi, Sudhir. Good morning and good to see you, Ben. Well, let's talk about the largest part of your business. And in Q3 FY25, the domestic formulation sales grew by around 12% year on year. That even beat IPM growth, which was around 8%. And this was led by chronic therapies. Will India growth from year on as well continue to do well? And will it be led by, chronic